Welcome back to another episode of Investing Explained. Here's today's question. Fantastic question. So the concept you relate to here is the dollar cost averaging concept, which is a well-known concept, and a lot of well-known investors have been talking about this for years now. One of the most prominent is the Vanguard founder, Jan Bogle. It's one of the most simple forms. You invest your monthly cash flows into the stock market every month. And I think it's a great strategy overall. And if you spend less than you make every month and just do that, meaning just invest the difference into the stock market, regardless of the price, you'll do just fine. Because the advantage of this is that you're not really considering whether or not the stock market is high or low, but you can spend your time without stress going about your normal business, with job and family, and know that you can still retire well off. Now, so to your question about do we as intrinsic value investors, do we use some part of this strategy, the dollar cost averaging strategy? I think the best way for me to respond to this question is that yes, some components of it, I think that most investors can utilize that with some advantage. But it's also important to mention that the strength of this strategy is also the weakness. Namely, that you do not consider the price compared to the value of the stock market. So while this is a time saver for sure, if you place your money where it does not yield the highest return, it's just bound to give you a lower return by definition. At least if you know how to price the different categories of assets. However, the reason why I still use the dollar cost averaging strategy to some extent is really because of the simplicity and the humble approach of not knowing. We could be wrong in our assessment of the market, of the individual stock, or bond for that matter. And we also have to remember that we pay a big opportunity cost by having cash, or by being wrong, by not being invested. Statistically, you'll be paying 7% after inflation of not being invested in the stock market if you hold cash instead. So it is just a very difficult opportunity cost to work with from trying to time the market one way or the other. So what I do is to aim to have as little cash position as I can, but still always have the cash to invest in something that's very cheap, and then use my monthly cash flow where I can find the best return. So generally, I would say I would rather be invested in various assets than not be, because of the opportunity cost. That's it. Preston and I will continue explaining investing, so go ahead and hit that subscribe button.